Some people look at wealth and think it's a matter of luck or inheritance. But professional investors know that building an empire starts from zero. The path from nothing to becoming a deal maker isn't mysterious. It's systematic. It's about mindset, strategy, and the ability to spot opportunity where others see chaos. Today, we're diving into how top investors think and act, and the exact principles that transform ordinary people into financial powerhouses. These lessons aren't theory. They're proven by the people who've turned small beginnings into multi-billion-dollar empires. The first secret is thinking like a deal maker. Successful investors constantly ask, where can I create value? They see transactions not as simple exchanges of money, but as opportunities to solve problems, connect people, or restructure systems. Warren Buffett didn't become the Oracle of Omaha by buying anything and everything. He sought businesses with real, sustainable value. Deal-making is about understanding assets, relationships, and potential upside. The mindset shift is critical. Don't wait for opportunities to come to you. Instead, train yourself to see opportunities in everyday situations, analyze them deeply, and act decisively. Preparation is another pillar. The pros don't enter a deal blindly. They study the market, the competition, the financials, and the people involved. Ray Dalio built Bridgewater Associates on research, data, and meticulous analysis. Every move was stress-tested against multiple economic scenarios. Before they commit a dollar, top investors understand both the upside and downside. The lesson: preparation reduces risk and increases confidence. Being prepared doesn't just make you smarter, it makes you faster, sharper, and far more effective when negotiating deals. A deal maker without preparation is like a soldier without a map. Timing is crucial, yet it's often misunderstood. Many amateur investors wait for the perfect moment. That never comes. Professional investors understand that perfect timing is rare, but calculated timing is everything. Jeff Bezos launched Amazon during the early days of the internet. Not when it was guaranteed, but when the potential for growth was enormous. Timing a deal isn't about luck, it's about aligning preparation, opportunity, and risk assessment. Learning to act decisively when conditions are favorable separates deal makers from dreamers. Every day you delay, someone else is executing while you hesitate. Risk management is the invisible force behind every successful investor. Deal makers aren't reckless, they measure risk in ways most people ignore. Richard Branson often invests in bold ideas, but always understands the downside and has strategies to mitigate it. Understanding risk means knowing what you can afford to lose, how to hedge positions, and how to structure deals so that reward outweighs exposure. This mindset prevents catastrophic losses while allowing for extraordinary upside. Without risk management, even the smartest investor can lose everything. Professional deal makers always ask, what's the worst-case scenario, and can I survive it? Relationships are currency in the world of deals. Professional investors know that who you know, and how you treat them, can make or break a deal. Elon Musk's early ventures were fueled not just by vision, but by strategic relationships with investors, engineers, and partners who believed in his mission. Building trust, communicating clearly, and understanding others' incentives are essential. Deals often fall apart not because of strategy, but because people fail to align interests. Cultivating strong networks multiplies opportunities, accelerates negotiations, and opens doors that money alone cannot. Negotiation is where a deal maker earns their edge. Top investors study human psychology and leverage it to create win-win scenarios. They listen more than they speak, ask precise questions, and uncover motivations that others overlook. Warren Buffett often emphasizes that good deals are those where all parties feel satisfied, because lasting value comes from sustainable agreements. Learning to negotiate isn't about being aggressive, it's about being strategic, empathetic, and focused on the bigger picture. Every deal you negotiate successfully builds credibility, reputation, and momentum for the next one. Leverage is another defining factor. Professional investors know how to use resources beyond cash, like expertise, influence, or time, to maximize outcomes. Leverage can magnify returns but also amplify mistakes if used carelessly. The key is understanding where and how to deploy it safely. Deal makers structure partnerships, debt, or strategic alliances to expand capacity without overexposing themselves. Leverage turns small opportunities into empire-building transactions, but it demands discipline. Knowing when to pull the trigger and how much to risk separates amateurs from pros. Learning from failure is a hallmark of professional investors. Every deal carries the possibility of loss, but what sets top performers apart is how they respond. Ray Dalio encourages studying mistakes obsessively, analyzing every misstep for lessons. Elon Musk's early failures with SpaceX rockets weren't disasters, they were data points guiding the next iteration. Deal making is a process of continuous learning. Each setback is an opportunity to refine judgment, improve strategy, and avoid repeating the same errors. A deal maker's mindset transforms losses into stepping stones toward larger victories. Scaling is the next stage after initial success. Early deals often involve small amounts of capital or influence, but professional investors know how to scale operations and replicate winning strategies. Jeff Bezos reinvested profits from Amazon's book sales to expand into new markets, gradually turning small successes into a global empire. Scaling isn't just about money, it's about systems, team building, and strategy replication. Each deal provides knowledge, networks, and operational insight that fuel future transactions. A deal maker thinks long-term, envisioning how each move builds toward a larger portfolio of opportunities. Innovation is a common thread among pro investors. They don't just follow trends, they create them. Cathie Wood invests in disruptive technologies because she sees the potential for massive transformation. Innovative thinking allows deal makers to identify opportunities others miss, gaining advantages before markets catch up. Whether it's through technology, business models, or unconventional strategies, innovation gives professional investors leverage that money alone cannot buy. It's a mindset that constantly asks, what could change the game? And how can I position myself to benefit? Discipline and patience are non-negotiable. Deals rarely materialize instantly, and markets are volatile. Warren Buffett didn't become a billionaire by reacting impulsively. He waited for the right opportunities and held positions for decades. Patience allows investors to act strategically, avoid emotional mistakes, and maximize returns. Discipline ensures consistency, reinforcing processes, systems, and principles that create predictable outcomes over time. The first deal may not be perfect, but consistent action, guided by discipline, compounds into extraordinary results. Vision sets pro investors apart from ordinary participants. They see beyond the immediate transaction and understand how deals fit into broader market trends and long-term strategies. Richard Branson's ventures often began with small bets, but were aligned with his long-term vision of brand expansion. Deal makers think several steps ahead, anticipating market shifts, potential synergies, and future opportunities. Vision allows investors to act decisively in moments of uncertainty because they know their moves are part of a bigger plan. Without vision, even profitable deals may fail to contribute meaningfully to lasting wealth. Adaptability is critical in dynamic markets. Even the most meticulously planned deals encounter unexpected variables. Professional investors monitor trends, adjust strategies, and pivot when necessary. Elon Musk shifted strategies multiple times at Tesla and SpaceX based on technological realities and market demand. Flexibility doesn't mean abandoning principles. It means applying them intelligently in changing conditions. A deal maker who can adapt maintains momentum, minimizes risk, and turns challenges into opportunities that others might avoid. Finally, professional investors cultivate a mindset of abundance. They focus on creating value, building opportunities, and seeing potential everywhere. Deals aren't zero-sum, they are mechanisms for growth. Warren Buffett often emphasizes that the best deals are mutually beneficial, creating wealth for all parties involved. By thinking in terms of value creation, rather than competition, deal makers unlock opportunities that others ignore. This mindset transforms how you approach every interaction, every investment, and every negotiation. Wealth begins with a belief in abundance and a commitment to creating it. Your first deals may be small, imperfect, or uncertain, but by adopting the mindset and actions of professional investors, you lay the foundation for a career defined by successful transactions, financial growth, and the ability to seize opportunities others overlook. Deal making is a skill, and like any skill, it grows through study, practice, and reflection. Start today. Analyze, network, act decisively, and embrace every lesson. One deal at a time, you move from zero to a position of real influence and wealth. Remember, pro investors aren't lucky, they're deliberate. They prepare, they act, and they persist. They see opportunity where others see risk, and they transform ideas into deals, and deals into empires. The principles are simple, but execution separates the dreamers from the deal makers. Your journey begins now. Every decision, every negotiation, every calculated risk compounds toward mastery.